everyone, welcome to EduTap. I hope you can hear me clearly and you can see me clearly. And today we are going to discuss a very important finance news article regarding the RBI Annual Report. Okay, so we will discuss in brief that what is the RBI Annual Report and other important things under the RBI Annual Report. Okay, so now before starting with the session, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So now starting with the annual report 2021-2022 that has been recently released by the RBI in May 2022. Okay, so here, good morning Saurabh. So now see what was the thing before that the year 2020-21 was significant because there the change was there by the RBI. From July to June financial year, the RBI changed the financial year to April to March in this year, and so this annual report is important because it's focused on April to March. Okay. So I hope you understand that before 2020-21 the financial year was taken in India as July to June, but after that the Reserve Bank of India in 2020-21, the Reserve Bank of India changed it to April to March. So it can be asked that before 2020-21, what was the financial year? What was considered the financial year? Okay. So here the Reserve Bank of India has released the annual report after it adopted an April to March cycle for fiscal 2021-22. So for this fiscal year, the April to March cycle was chosen. Okay. From here we have started the April to March financial year. So next, its cover design that you have seen in the first slide, the cover design was the rupee sign was there, the growth pattern was there. So it shows that the rupees is under the COVID stress. Okay, the rupee is under the COVID stress, if not stricken, seem to capture RBI's current challenge. So that is the RBI's current challenge. The inflation is there, the growth is there, the rupee is getting depreciated. So all of this is the challenge that RBI is facing. So now the Indian economy renewed its tryst with the recovery. So it has started the recovery pattern from the pandemic in 2021-22, albeit interrupted by a violent second wave. So what happened that you can see that there was the second wave that was like Omicron also came, as well as there was the thing about the Russia-Ukraine war, the geopolitical tensions are there. The other monetary policies, the other reserve banks of the other countries are also changing their monetary policies, due to which also there is much friction, there is much up and down that is coming. Okay, there is much volatility in the financial market. So Omicron variant came, the COVID was there, the recovery was happening, but the again and again the waves were coming. Then there was geopolitical situations, tensions that were there, as well as the other reserve banks policies were also there that were creating the fluctuation that was there. Okay, so there was much things that were going on and the RBI has to cater through that. So now the economy review and prospects. So we can say that here you can see that these were the chapters, these were the parts, and here we can see that the first part is about the economy, okay, review and prospects. The second part is about the working and operations of the Reserve Bank of India, and here if we divide this part, the accounts part, so this we can say is the third part. So the first part, so the annual report is widely differentiated into two parts. The first part is about the economy, the review of the economy that has been given in the annual report. The second part is about the working and operations of the departments of Reserve Bank of India or the Reserve Bank of India. And here we have divided here the accounts. That is not very important for the exam point of view. The Reserve Bank also given the accounts, but mostly there are two parts. I hope you have understood about the parts of the annual report. Next is starting with the economy review and prospects. So here you can see that the report is stating that the explanation of geopolitical tensions. So the geopolitical tensions like the Russia-Ukraine war, due to that much of the trouble has come in the supply chain. There are supply chain disruptions that are there. So geopolitical tensions, that is the war from late February 2022. So the war started in late February 2022. This was a brutal blow to the recovery that was happening in not only a single country, that is India, but in the world economy it was a big blow. Battered as it has been through 2021. In 2021 the COVID was there. Then in 2022 we saw the war. Multiple waves of the pandemic were coming, supply chain was disrupted, there was elevated inflation that is there, there is financial market turbulence that is there. So all of this is not affecting India only, but it is affecting the whole of the world economy. So now what is the data? So in the high frequency indicators point to some loss of momentum that has happened to the recovery that has been gaining traction, and in India, what has happened due to these situations, due to the world economy, due to the inflation, due to the growth that has been affected in India, India was seeing a recovery, and you can see that there were 86.8% of the adult population were fully vaccinated. So we were saying, okay, we can recover now, okay, we can go out and work now. And there were booster doses also that were given to 3.5% of the citizens of our country. But then what happened? The geopolitical situations came, the fluctuations in the financial market came, and again there was the momentum that was being gained by this all was lost, okay, is losing, we can say. So in April 2021, the World Economic Outlook, the IMF estimated world GDP to grow by 6.0% in 2021 and world trade by 8.4%. So this is the data that has been given in April 2021 regarding the 2021. So the world, because this is the report of 2021-22. So we will be seeing the data of the previous year. Okay. So here the IMF has given the report in 2022 also. That is the World Economic Outlook, and it has placed the estimation of 2021 at 6.1%. That is a little higher than 6.0% that was estimated for 2021. So this is 6.1% to 3.6%, and it has been said, see, in 2021 the IMF said that we grew at 6.1%, but in 2022 and 23 it is expecting to grow at half than that, we can say 3.6%. That is not a big percentage, we can say. So it is expecting the world to grow at 3.6% only in 2022-23. Okay. So then, as well as this is the India data, we have seen about the World Economic Outlook, we have seen about the world growth, but now we will see that what the NSO, that is National Statistical Office, has said about India. So NSO has said that the real GDP growth is at 8.9%. It is estimated at 8.9% for 2021-22. Okay. So now I hope next is the headline inflation. Headline inflation averaged at 5.5% in 21-22 as against 6.2% that was in 2020-21. So it was a good percentage that we can say headline inflation. But what happened that in the last phase of the 2021-22 in the quarter 4, that was from January till March, you saw that in January the inflation was 6.01%. In January 2022 the inflation was 6.01%. Then it was 6.07% in Feb 2022, and it was 6.9%, nearly 6.9% in the March 2022. So the inflation was growing too much in the quarter 4 of the 2021-22 and rendered the conduct of monetary policy challenging. So it was a challenge that came in front of the monetary policy. So it was the economy review that has been given by the RBI. Okay, I tried to brief it up. Overview is there. Next is the performance of banking sector and NBFCs. So here the balance sheet has been given of the non-banking financial companies, and this has expanded in 2021-22, but the asset quality that has been deteriorated, the asset quality is not that good. Okay, asset quality means the loans that it has given. So banking sector was cushioned against the disruptions that came due to the COVID, that came due to the geopolitical situations caused by the pandemic by adequate liquidity support. So there was adequate liquidity support. We saw that RBI was keeping the repo rate at around 4% for a whole year of 2021-22. The RBI changed the repo rate in May 2022. So that was after the 2021-22. That was after this year passed, okay, after this financial year passed. So for the whole 2021-22, the percentage was, repo rate was 4%. So there was liquidity support that was given. Next is, given the growing interconnectedness of the NBFCs and the banks and the other financial institutions, there were more prominent restrictions, regulations that was brought by the RBI. So we talked about the PCA framework for the NBFC. I have made a separate video. We talked about the scale-based regulatory framework of NBFCs that we talked about in a separate session, in a separate video. So all of the new guidelines were brought. As you can see, the scale-based regulatory framework for the NBFCs came in October 22, 2021. Now, why this is important? Because all of this is written under the annual report. Okay, annual report discussed about the scale-based regulatory framework, PCA framework. So all of this is from the annual report. So Reserve Bank has also issued guidelines on December 14, 2021 to extend the PCA framework for the NBFCs. So in October, it brought scale-based regulatory framework. In December, it brought this. Next is directions issued on March 14, 2022 were aimed at enhancing the customer protection for microfinance. So as recently there was a microfinance norms that came, okay, in which the microfinance definition was changed, in which the lending definition was changed. All of this video I have also made. All the big notifications that came, I have already made a video. I have already discussed that with you, so I won't discuss it again and again because it would be a very long video if I discuss it again. So the microfinance, the borrowers and the harmonizing the regulation, the regulatory framework for the microfinance also came in March. So all of these came for the NBFCs. The PCA framework was revised for the banks also. So this was all that the RBI has done in the 2021-22 for the NBFCs and banks. You can see that, see, annual report is about what? That what it has done in the past and what it will do forward. So what it has done in the past, you have already studied about all of that. So here you will only need to revise. And Dharamveer is saying that, can I compile a PDF for the financial news? I am providing you the PDFs of the sessions, so you can just go through that, okay? So next is the priority sector lending. This is a very important percent. Priority sector lending for scheduled commercial banks stood at 42.8%. That was greater than 40%. That is the target for the scheduled commercial banks. So it was doing great, and all bank groups achieved the prescribed PSL target of 40% during the 2021-22. So this is the important percentage, that how much more it has done from the 40%. So it is 42.8%. So the bank was doing fine in the COVID situation also. It was doing the PSL targets. Next is financial inclusion and customer empowerment. So RBI has done a lot regarding the financial inclusion. It has brought the financial inclusion index, in which there are three broad parameters. The access is there, the access, the usage and the quality. These are the broad three parameters on which the financial inclusion index is based on. There is no base here for the financial inclusion index, okay, and the percentages are also given, that you can see. Next is digital payment index that was brought here. There are 5 broad parameters that are there. I have made a separate video regarding this. The broad parameters we have discussed, that is the infrastructure, the digital payment infrastructure, everything we have discussed about this. So digital payment index constructed to capture the extent of digitization that has happened into the country. So regarding that, this index is there, and it came in September 2021 that we received. Then it came, so it is regarding DPI. Next is UPI system. The UPI 123 pay was brought for the feature phones. This was also there, and it is for 40 crore feature phone users in the country. So it will make it easy for the feature phone users to use the UPI 123 pay, and through that it will be easier to pay. So if you have studied now, if you have studied all of these topics, then the annual report is very small for you all, okay. It is like you have already covered it up, so you only have to go through the data points that the RBI has given. If you know about the RBIH, that is the Reserve Bank Innovation Hub, if you know about UPI 123 pay, if you know about PCA, if you know about scale-based regulatory framework, you just have to go through the data points then, okay. Otherwise, everything you have studied, everything I have taken a session already on. So Payment Infrastructure Development Fund, this is the PIDF. This is a scheme that helps to expand the digital payment acceptance footprint across the country. So here the digital payment infrastructure is provided, like the POS machines and everything. So this has with over 85 lakh payment touch points deployed in 2021 alone. So this is the important number. You can see that 85 lakh payment touch points has been deployed in 2021 alone, and this PIDF is for the touch points like the POS machines and all. So RBIH, that is Reserve Bank Innovation Hub, has also been launched to do the financial inclusion, where all the market participants, major market participants, can come together and work to innovate something, to bring a new thing. So that is, this was set up during the year to build an ecosystem for development of the prototypes, new machines, new patents, new proofs and everything. Okay, then you saw the regulatory sandbox also. There were 3 cohorts. Now there is one more 4th cohort that has also came forward. So all of this I hope you already know. Next is about the monetary policy. So the conduct of monetary policy in 2021-22 was guided by the objective of reviving and sustaining the growth, because at that time the COVID was the most important problem. So the RBI was looking forward to grow the economy. Okay, so it kept the policy repo rate unchanged during the whole year. For the 2021-22, the repo rate was kept unchanged at 4% and maintained its state contingent accommodative stance. So it maintained, RBI maintained accommodative stance for the whole year 2021-22 and it kept the repo rate constant. Sharp contraction of 6.6% in real GDP in 2021-22 and the uneven fragile recovery in 2021-22 was interrupted by a second wave in the first quarter and a third wave commencing in the late. So here you can just see the data and you can understand that there was the waves that were coming in between and that were challenging the recovery, challenging the monetary policy of the country. So the CRR was restored to its pre-pandemic level. It was 4% in the 2021, effective the fortnights beginning March 2021 and May 2021. So in March 2021, 0.5 percentage was reduced for the CRR, and in May again 0.5% was reduced for the CRR, and it was brought to the level of 4%. But in the recent Monetary Policy Committee review that happened in May 2022, it was increased to 4.5%. So you can remember that in March 2021 and May 2021, the data was reduced. The CRR was reduced by 0.5% and it was brought to 4%. But in May 2022, it was increased to 4.5%. Okay, by 50 basis point. So here it is the summary of the economic health check about the inflation, liquidity that is in the economy, the growth that has happened. So you can read all of this, and in the quarter 4, that is, I told you, from the Jan 2022 to March 2022, the data, the inflation was above 6%. It was 6.01%, 6.07%, 6.9%. So it was above that. So monetary policy now, we have discussed all of this. The MPC revised downwards the real GDP growth for 2022-23. So MPC, see, the percentage that it has given was 7.8% before. In this was nearly on February, I guess. In Monetary Policy Committee, it has given the data of 7.8% that India will grow in 2022-23 by 7.8%. But now in the new Monetary Policy Committee in April, it said that the India will be growing at 7.2%. So it has reduced the growth percentage. A decline of 60 basis point pre-war projection, like before war in February, this was the percentage that how India will grow. But now after the war is there and geopolitical tensions are there, so the Monetary Policy Committee has revised its growth percentage to 7.2% for the India for this year. Next is inflation was projected higher by 120 basis point at 5.7%. Okay, it was like in April 2022, this was the percentage for the inflation that MPC was saying, but in June it was revised to 6.7%, that the inflation will grow at 6.7% in our country. So this was April data and this is June data. The CRR has been restored. This is from before. So now coming to the bank frauds, the RBI data considers frauds above 1 lakh and above only. So this is, direct question can come from this, that what is considered bank fraud under RBI data. So report highlighted that the frauds reported by banks and other financial institutions in value terms more than halved in 2021-22, but the volume has increased. Okay, the number has increased, but the value is decreasing. So there are more and more frauds that is happening, but the value has decreased. So here the data point is here that 56.28% from the frauds has increased from 60 to 1.38 trillion in 2020-21. Sorry, decreased in value from 2020 to 2021 to 2021-22, and the number of frauds has increased by 23.69%. So the value has decreased by 56.28%, and the volume has increased by, volume means number has increased by 23.69%. Private sector banks reported maximum number of frauds. There are more volume. There is more number of frauds that is happening with the private sector, but the value is more in the value, that is the frauds of the value is happening more in the public sector banks. Okay, maximum to the fraud amount. Value means amount. Value means the amount that is being going from the frauds is more for the public sector banks. Okay. As well as the private sector banks are seeing the frauds in terms of like the internet fraud that is happening, the card fraud, the internet fraud that is happening, the account of small value. So small value frauds are happening more in the private sector. frauds are of small amount but greater in number, okay. In the public sector, the frauds are of big amount but less in number. So here you can see the fraud amount reported by public sector banks was mainly in loan portfolio. So the private sector that were seeing the frauds that were due to the frauds of the card, internet, the Google Pay, some fraud has happened, like some small payment has disrupted or something, someone else has taken the payment or something. But in the public sector, the fraud was due to the loan portfolio that was there, okay. So next is about the currency management. So the value and volume of banknotes in circulation increased by 9.9% and 5.0% respectively. So the banknote in circulation has increased, the value has increased by 9.9% and the volume has increased by 5.0% during 21-22 as compared with 16.8% and 7.2% in during the 2020-21. So as we are seeing that we want less of the less of the currency to circulate in the physical form, we want more digital payments to happen, and we can say that that is happening because the percentage has decreased in the previous year than the 2020-21. Okay, that means that more digital payments are happening now. In value terms, the share of 500 and 2000 banknotes together accounted for 87.1% of the total value of the banknotes. In volume terms, 500 denomination constituted the highest share at 34.9%. So in volume, the transaction was happening through 500 mostly. So these are the data points that the PDF will be provided. You can easily remember it. I will try to make you understand that what was being talked about in the whole of the annual report. Next is fake currency was talked about in the annual report after that. So in 2020-21, counterfeit notes saw a decline, but in 2021-22, the counterfeit notes witnessed a 10.7% increase. So there were more fake currency that was coming. Rupees 500 denomination fake currencies rose by 101.9% in 2021-22. So next is fake notes of 2000 increased by 54.6%. The total fake Indian currency notes that were detected in the banking system was 6.9% at the RBI and 93.1% at the other banks across the country. So now coming to the payment and settlement system with information technology. So we have discussed about the banks, we have discussed about the NBFCS, we have discussed about the economy and the review of the economy. Now coming to the payment and settlement system with the information technology. So the payment systems recorded a robust growth of 63.6%. We can say the payment system was both through the digital payments that were happening and through the paper-based instruments like the checks and all. In terms of volume during this, on top of the expansion of 26.7% in the previous year, that is 2020-21. Okay. Next is in value terms, the growth was 23.1% as against a decline. Decline happened in 2020-21, but in 2021-22 we saw a growth. Next is the growth in digital payments can be attributed to the increased availability of the acceptance infrastructure. There is the PIDF, like I told you, that through this the government is trying, the RBI is trying for more and more customers, for more and more merchants to have the infrastructure, payment infrastructure, to have the POS machines and all. So this is payment infrastructure development fund that was provided so that the merchants can have more and more POS machines. Okay, the POS machines can be increased, the digital infrastructure can be increased. The number of point of sale terminals has increased by this much, and this is the data that you can read, that the ATMs has also increased, the QR, the Bharat quick response QR codes has also been deployed more, it has also been increased, as well as you must have seen that under the payment and settlement system, the IMPS limit has been increased, the UPI limit for the IPOs has been increased from the 2 lakh to 5 lakh. Both of them has been increased for 2 lakh to 5 lakh, as well as the remittances that were going to the Nepal, and that limit has also increased from the 50,000 to 2 lakh, I guess. So all of this was under the payment and settlement system, and all of this we have already discussed about the IMPS, UPI, about the Nepal remittance that was going to the Nepal, or that was coming from the Nepal, that has also been, the limit has been increased for all of these. So this was all for today. I hope you have got the brief overview of the report, annual report. What was being talked about in the annual report, it was about the working and operations, that how the RBI is working, how the departments of RBI is working, as well as The annual report was also about the economic review, that what is happening to the economy, okay. And the RBI has said for the coming period that it will withdraw the accommodating stance. It will withdraw the accommodating stance, that is, it is keeping on increasing the repo rate to decrease the inflation, and the expectation of inflation as per the June Monetary Policy Committee is 6.7%, and the growth expectation by the Monetary Policy Committee is 7.2%. So these are the percentages that you need to remember, and this is the question that you need to answer, okay. So this is the second question. I have told you the 3 broad parameters of the Financial Inclusion Index. You can easily answer this one also. So thank you very much. I hope you have understood the brief outlay of the annual report, the overview that I have given to you. Okay. So thank you very much. Thank you everyone.